Welcome back to the channel, everybody. Thank you so much for joining me and allowing me to continue to be your daily advocate. If you're new here or you're not subscribed for any reason, please do me a huge favor and hit the subscribe button. Thank you to all of you who have been watching and following me for so long. It truly means a lot, and I'm glad that I can be this person.
Apple CEO says he owns Bitcoin, Ethereum, and other crypto. This is Brad Garlinghouse kind of talking about something a little different here. However, he disclosed in a recent CNBC interview that he owns the world's top 2 cryptocurrencies, but he also is saying, polarization isn't healthy in my judgment, talking about the entire cryptocurrency industry. According to Garlinghouse, who is also charged by the SEC, okay, we know about that, he says, I own Bitcoin, I own Ether, and some others. I am an absolute believer that this industry is going to continue to thrive. Garlinghouse believes that adopting other digital currencies, outside XRP will not stop Ripple's native cryptocurrency from soaring because all boats can rise, he added. Bitcoin tribalism is frustrating for industry growth. He said, while Garlinghouse did not mention the names of investors who have dedicated their funds exclusively to particularly Bitcoin, there are some investors who have only advocated for Bitcoin. He says tribalism around Bitcoin and other cryptocurrencies is holding back the entire $2 trillion market. For instance, Jack Dorsey, the former Twitter CEO and former Square CEO, has publicly declared support for Bitcoin on several occasions and sponsored research to foster the development of the top asset class. Dorsey noted earlier this year that he is a Bitcoin maximalist and he is not considering adopting any other cryptocurrency, including Ethereum, in the near future. And a similar story is true for Michael Saylor, the CEO and founder of leading business intelligence firm company MicroStrategy, also a big Bitcoin proponent. But Brad Garlinghouse sees this as problematic. He's saying, look, the industry is being held back by these Bitcoin maxis, and it's kind of a shame because you got to think of it in terms of, okay, who are these guys? Why do they have so much influence? Why is Bitcoin the king currency? Well, you got to remember, a lot of these guys got into the currency way back here, let's call it 2011, 2012, when the currency was at $2.50. You could buy one Bitcoin for $2.50, guys, just over 10 years ago. And I mean, even before that, you could buy Bitcoin for pennies. And so, if you were one of these guys who decided, okay, let's see where this goes, I'm gonna throw in even just something moderate for some of these investors, $2,500, and buying Bitcoin at $2.50 would give you about 1,000 Bitcoin. And so, at today's valuation for Bitcoin times 1,000, you've got $41 million. So think about the types of guys that were getting into Bitcoin back in 2010, 2011, 2012, even throughout 2013, piling on the money. These guys are uber rich. They don't want you to know how rich they are, but they're using their money and they're using their influence to really promote Bitcoin. And this is why I'm feeling like this is a bit of an uphill battle for the rest of the crypto industry. And, Brad Garlinghouse, saying the same. So they have a vested interest in keeping Bitcoin going. But, the rest of the world isn't going that way. And the IMF, we've heard from them. We've heard from other organizations globally, calling out Bitcoin and calling out the countries that are adopting Bitcoin. So there is a bit of a battle there. I didn't want to dwell on Bitcoin too much, but it does play an important part of this story. What I want to get into is the crypto market today. Could we actually be through a bear market and maybe we didn't even know it? Okay, let me talk about this for a second. This coming from Gone Girl Crypto here. No, this is not some random crypto token. It's Netflix, guys. And I don't know if this is on the hourly or the 4-hour or what, but you can see Netflix price has dropped. So I got the Netflix chart up here on the weekly, and just to give you guys a sense of where Netflix has gone over the years, well, here's the chart. Nothing but bullish momentum roughly over the last decade or so for Netflix. The streaming giant, of course, that has done very, very well, especially over the pandemic. But now we're seeing prices really decline, and it's not so much because the company is doing poorly. This is just one example of where we are seeing big tech stocks go, guys, and I think this trend might continue throughout this decade. People are going to start pulling out of the big tech sector. We're already seeing it on the NASDAQ. Okay, let me just bring up the NASDAQ here real quickly. NASDAQ here has been in a bit of a free fall. If I just throw Fibonacci on here, you can see NASDAQ came down here, retracing back up to the 0.382, and looks like it's going to turn over, probably make lower lows. Let me just bring up the Dow Jones real quickly here. You can see the Dow Jones in a similar situation. throwing at Fibonacci on here, and again, this is on the weekly, so each candlestick represents 1 week of time. You can see it did reach up to the 0.618, almost hitting about halfway to the 0.702 before turning around. Now we are seeing a bit of a bounce here, so who knows what's going to happen. My guess is, though, that we are going to see new lows. This is happening across the board, guys. Let me just bring up the S&P 500 as well. So the S&P 500 here on the weekly, Fibonacci from the top all the way to the bottom there, and the S&P 500 has actually hit that 0.702 and is now in free fall. Again, we have a bit of an uptick here, but I think that is going to be short-lived before we see lower lows. Okay, so I've got the Bitcoin chart back up here, and some are saying that, Bitcoin correlates to the rest of the markets. This has been a recent theory that has surfaced. There was a time when we thought Bitcoin doesn't correlate to the rest of the markets, and now we're seeing, no, Bitcoin is kind of correlating. But by how much, okay? I just showed you guys a couple of market indices where they were retracing 10 years of a bull market and now retracing, the last one retracing at the 0.702. Here we have Bitcoin though, okay? And Bitcoin, over this last little while, did come down. It did come down quite significantly. For us crypto holders, it doesn't feel as significant as maybe stock market traditional investors. Bitcoin did come down about 52%, now rebounding up to the 0.382. And so this correction structure is similar to what we are seeing in the rest of the market. However, my theory goes as such, and I've been talking about this now for a few months, okay, for a couple of months at least, that this is actually not the top for Bitcoin, and that this is a reaccumulation phase moving sideways before we pop off to that next target. This is what's going to bring the rest of the market up, including altcoins. And so the next point that I just discovered recently is, could this have actually been the bear market? And maybe because it was so insignificant, kind of like recent variations of the beer flu, we didn't even notice it happened. A theory that makes you go, Okay, so this is a possibility, okay, guys? And hear me out for a second. Planet Ponzi here saying central banks, USA's Federal Reserve, the EU's central bank here, the UK's Bank of England, and Japan's Bank of Japan. Reckless policies have caused grotesque asset bubbles, record wealth inequality, 20% inflation, and it's only just begun. The coming crisis will be sparked by a lack of liquidity. Now, keep that in mind. Remember what coins are going to be the liquidity tokens, XRP, XLM, and here is again just a chart of the NASDAQ bubble trouble from back in November of 2021, and now we are seeing another earnings miss pre-market. Netflix is down 65%, as I just showed you guys, from its peak November 2021 bubble valuation. We have seen that in free fall, essentially. And so just going back to Bitcoin, okay, guys, this from TechDev here, Bitcoin Corrective Structure Update. Now, TechDev is great because he's comparing these to other markets, okay, other structures in other types of markets, not even focusing on cryptocurrency specifically, but in this case, the Dow Jones versus Bitcoin. So if you take a look at this chart here, and guys, remember, all chart patterns are human psychology plotted on a page. So it doesn't matter whether it's the Dow Jones or the NASDAQ or Bitcoin or whatever, the structures are where you're going to find the clues to where people are going to trade next. And if I punch in here so you guys can see that a little more closely, you can see similar patterns here for the Dow Jones. And again, this is the Dow Jones from about late 1989 to mid 1991. You can see distribution above all-time high, and then the bounce off the 50-week moving average. B-wave at the new all-time high, coming back down, correcting the initial rejection, and then we moved up, making further highs. Again, this is the Dow Jones between 1989 and mid-1991. Compare that to Bitcoin, guys, and you are seeing something similar here. Distribution above all-time high, bounce off the 50-week moving average, the B-wave at a new all-time high, now the initial rejection, which is the part we are in right this second. And so what's the next move? Are investors realizing the potential for Bitcoin and the cryptocurrency market at this stage in the game? All things that we should be paying attention to, and so this goes to support this thesis that maybe this was the latest bear market crash and we just didn't even feel it yet. Now here's one from T-Analyst here on Twitter. Bitcoin, the last 10 years. We are starting with the 5th great bullish cycle. And this is the icing on the cake here, okay? Second cycle, so he's starting this from the second cycle, the up and then the down. Third cycle, the up and then the down. Fourth cycle, the up, a correction. And so are we now in the 5th cycle moving upwards, which would mean that what we just experienced here, guys, was the correction that so many of us kind of didn't even bother to acknowledge. Was this a bear market, and did we even know we were in it? Okay, so let me just bring the Bitcoin chart back up here on the weekly, and I have it extended out so you guys can get that whole picture over the last decade or so of Bitcoin trends. And as per this tweet here, as per TA Analyst, we're taking a look at the second cycle, the third cycle, and the fourth cycle, assuming this was a correction. And as you guys can see, these corrections just got shorter and shorter over time, which would also lend to this theory that maybe we did actually experience a Bitcoin bear market without even knowing it. Okay, so now let me just bring the time tool over here, and we're going to take it at the top of this first Bitcoin top, bringing it right down to the bottom there. As you guys can see, roughly, let's see, is about 413, where does it go here? About 420 days from the top of the market all the way down here to the bottom of the market. This was between 2013 and 2015. If we take the top over here from 2017 all the way down here to 2018, you guys can see it's getting shorter, 357 days versus 420 days. Okay, now let's bring it over here, and let's assume this was the top of the market here, and let's assume that this is now the bottom. Okay, this is now roughly in and around here, that this was the correction that we saw. Okay, as per this tweet from T Analyst here, we saw the top of the market, now we are seeing a correction which would insinuate that this was the bear market, and that's only at 308 days. So it's looking as though it is getting shorter and shorter. The time frame for a bear market is getting shorter and shorter. And so let's just calculate percentage-wise how much it would be. And I'm just going to do this, divide this by 420. And so that's 85%. So this would be a 15% reduction in time from the first one at 420 days to the second one at 357 days. So a 15% reduction. I'm just taking the reverse to add it up to 1 here. So 85 plus 15 would be 1. Hope you guys are following the math there. Okay, and then let's take a look at the second one. 308 divided by 357 brings us to about 0.86, so very, very close. 14% less if we were to take 308 from 357. So 15% less, 14% less. That sounds like it's roughly in line, give or take a percentage point or so.
So enjoy your day, everybody. I'm always here for you. Leave any comments or questions below, and be sure to subscribe. But thanks, everybody. I really appreciate you. Enjoy your day, and I always have your back. So thanks so much, everybody.